Welcome to this week's BitShares DEV Hangout. This recording is brought to you by the Beyond Bitcoin crew. We welcome all BitShares members to join us weekly and discuss the latest news, updates, and developments. If you'd like to participate in our next meeting, then please join us live on Mumble every Friday at 10 a.m. Eastern Standard Time. Did you know the Beyond Bitcoin show now has a registered delegate? Please consider voting if you find our hangouts and recordings useful. The delegate name to vote for is fuzzy.beyondbitcoin. Again, that's fuzzy.beyondbitcoin. The Beyond Bitcoin crew would like to send out a big thank you to everyone who's already voted and allowing us the opportunity to serve the BitShares ecosystem and our valued community members. So once again, welcome and please enjoy the show.
Welcome to another Beyond Bitcoin Hangout. Today is Friday, the 8th of May, 2015. We are joined again by Bytemaster of the BitShares flagship decentralized exchange to talk about updates and answer some community questions. Today had some interesting tidbits of information for us that I didn't see coming. Bytemaster clarifies BitAssets 2.0 and talks about the new paid worker system and much more. Really looking forward to seeing the discussion that this one inspires. So let's just dig in, shall we?
No significant updates other than the fact that I am paying attention to all the requests on the forum for various changes. And I think that most of the requests out there are being factored into our roadmap and plans, and that they are not falling on deaf ears. So we've got a lot of stuff happening here, and we're going to be providing everyone with a lot more information in the next couple weeks.
The first question is from Volker. There may be a fundamental mismatch in the product and the customers who are likely to use BitShares, is the main component of his comment/question. And Permy grabbed that from another thread, brought it onto this thread, and he has some questions based on that topic. Number one, I'd like to hear more about who the target audience for BitShares is, and whether they are likely to be early adopters of a cryptocurrency. Do they need to be early adopters?
The target audience for BitShares has always been those who want to transact in a stable cryptocurrency, first and foremost. A cryptocurrency that is not dependent upon IOUs from an issuer. Now, BitUSD, BitGold, BitSilver give us that currency and that feature, but they're competing against other systems where major banks and exchanges are starting to issue their own IOUs on a blockchain, and those IOUs have some of the benefits of crypto, but you still have the trust factor. As the industry matures, I suspect that the government's going to approve of a lot of these IOUs, and most customers, most users out there are going to just use a bank-issued IOU that is fully redeemable. But there's still a group of people who is concerned about their funds being seized, frozen, and otherwise restricted. So I would say that the target market for the market-pegged assets are those who want to have free exchange without counterparty risk and without risk of government. Are the masses ever going to want free exchange without counterparty risk? Probably not. But the BitShares platform, with its user-issued assets and whitelist support, does support user-issued assets, and we are working with various banks and exchanges to issue their IOUs on the BitShares network, which means that BitShares can become the preferred decentralized exchange. There is a lot of benefit to be gained by having shared network effect of a common network, a common place to come and settle orders. And I think that just like Ripple is trying to bridge banks, BitShares can bridge the same institutions and then give the users the freedom to do trades without depending on any individual institution. And that is where BitShares fits in. So I think there's definitely a market for BitShares, and it's a market that does not currently have any competition in it.
This is a place that actually brings up a question that I would like to ask with respect to this topic. I was speaking with Tauland from BitSapphire approximately maybe 3 or 4 days ago, and I was asking him kind of where he thought everything was moving. And he seems to see everything moving toward user-issued assets and IOUs in the future. Where do you stand on that with respect to this topic?
User-issued assets and IOUs are going to be a big part of the future, but they have legal liabilities associated with them that are probably going to restrict their use to major organizations. What I can see happening, there's this disconnect between the market that wants freedom and the masses that want predictability and everything to be legal. Some people are willing to tolerate gray areas and uncertainties if it means they have freedom. Other people don't want that at all. And there's various degrees of ease of use between the two. It's a lot easier to use an IOU. It's a lot easier to understand IOUs. And as merchants and businesses, they're all going to want to be where things are most legal and accepted. And that probably means that the entire cryptocurrency industry is moving toward identity-based systems, and that we're going to have less and less. The mainstream cryptos are going to be less like Bitcoin and more like the current banking system. Recognizing that there is this difference between where the mainstream is and where a lot of us are. Why did we all come to cryptos? Because we wanted freedom. We wanted cryptocurrencies that had no restrictions, that had price stability and all these other benefits. Some of us want to get rich and have mass adoption. And I think it's going to be a challenge to get both mass adoption and please the core group of people that want freedom. And I think that there's probably going to be two different products in the future. One that is geared toward regulatory compliance and mass adoption, and the other that's geared toward all of us freedom-loving people that want price stability, but we don't want regulated institutions. So that's where I see things going. The user-issued market-pegged assets, I think, are going to be huge, and I realized something really amazing about the BitAsset 3.0, now renamed 2.0, because 2.0 never actually existed, so that's just going to confuse people. But the next iteration of BitAssets gives us a fully functional prediction market that any user can be the judge on. And we don't have to do anything else in order to predict who's going to win the election or who's going to, whether or not you're going to be, what the weather is going to be, or any of those things. We now have full-feature prediction markets on a blockchain. And the way you do that using the latest BitAssets is to publish a price feed of near zero, and then in the event, after the event occurs that you're trying to predict, adjust the feed up toward where it's supposed to be. And at that point in time, everyone can do forced settlement at that price. And you have a prediction market. So user privatized BitAssets combined with the 2.0 variation of BitAssets gives us general purpose prediction markets and a whole wide range of things you can do entirely based upon the price feed.
This actually is a good place to ask you the question then, because we've talked a little bit about these prediction markets and how these tokens can be used, right? But the cost of issuing one of these tokens would be the cost of a user-issued asset, essentially, right?
The cost of a user-issued asset depends on the cost of the symbol name you choose. It doesn't cost much at all to create one of these. And when you do create it, you get to collect all the fees from people trading it. So there's going to be a huge financial incentive for people to create prediction markets and then market prediction markets on the BitShares platform under the BitAssets 2.
Oh, okay. That's very interesting. Now, another point that you brought up was you mentioned whitelisting and blacklisting of accounts. And we just saw something with regard to Ripple, approximately maybe 3 weeks ago, freezing a large sum of money on one of the account holders on their chain. One of my concerns, being one of the people who's in the freedom camp that you talked about prior, is obvious here, right? If a chain like this can just shut down a user's funds, then I kind of find myself asking, why are we even here doing this? Why don't we just stick with the old system? Do you see a place for something more like webs of trust, or kind of like a granular white and blacklist?
White and blacklist that are on a per asset basis makes sense. It gives the market flexibility to represent all of the various options. Of course, BitAssets probably shouldn't have any whitelist, and of course the core asset certainly shouldn't have whitelisting on it if you are in the freedom camp. I think there's, everyone wants to know, a major exchange gets hacked, 10% of the supply of the currency is stolen, and people want to freeze the account. And there's currently no way to reach consensus on how to freeze an account in a timely manner that's actually practical. In theory, delegated proof of stake gives us the option to allow the delegates to immediately vote on freezing funds if we wanted such an option. But I think that would violate the core principles of things, and such a feature would fragment, and you want to create two different chains. One chain with that feature for everyone who wants compliance and security, and a blockchain that has, just like BitShares, like freedom.
So could you boil that down a little bit more?
What I'm saying is whitelists are very important for regulatory compliance. If you want banks to issue their assets on our network, whitelists and blacklists are a necessity for their asset. If you wanted to have whitelist and blacklist on the core asset, those whitelists would have to be maintained or controlled by the delegates, and now you'd be faced with a situation that would violate the core freedom principles of BitShares. So it'd have to be an entirely new chain in order to support whitelist and blacklist on the core asset. And then it's just a matter of where government regulations go and banks go, of whether or not they feel comfortable controlling their own asset versus operating on a platform with no restrictions, or only issuing their asset on a platform that is completely compliant top to bottom.
Okay, this is actually maybe a good place to actually move into a question asked by Riverhead then. With the paid worker proposal, can you discuss what happens to the existing delegates?
I would like the existing delegates to get paid from the transaction fees. They should get paid just enough to maintain their current position. And if we were to migrate to the worker proposal, then we would create a worker and a delegate for each of the current delegates until people decided to vote out the worker portion of their job title. So during any transition period, all people would end up with two things. The role would basically be split, the pay would be split, but their financial situation would be unchanged until shareholders start changing their votes.
And do you see the paid worker proposal coming into play anytime soon? Or is there an idea when this should be coming into effect? Or is that kind of an unknown at this juncture?
All I can say is you'll have more information about that particular type of thing in a couple of weeks.
how do the shareholders factor into that decision-making process?
Factor that to decision what?
How do the shareholders factor into that decision-making process? It sounds, if I'm reading between the lines properly, it sounds to me like there's a lot of decisions about it that's already been made, but you're waiting to release that information just because of PR concerns and synchronicity of other considerations.
Correct. I don't want to release partial information that would leave people confused. I'd rather have complete information that will answer everyone's questions all at one time, so that the people can see the big picture rather than just getting bits and fragments of the picture as things go.
Understand that, but so knowing that, how did the shareholders fit into that decision-making process? That's something you ought to be able to release now.
Generally speaking, we're going to have one last hard fork that is going to have significant changes, and it'll be the last one that does not have shareholder direct approval on it. After the announcement that we're going to have all future hard forks and changes of this type will require direct shareholder voting.
I see. Well, thank you. That definitely does clarify that point.
We more or less have to do the hard fork that gives us the infrastructure necessary to improve the way we calculate votes. Right now, vote tallying is one of the most expensive things, one of the biggest hits to performance, and it currently makes it very hard to do some things. The way we're tallying votes doesn't scale well. It's really hard to add new features and keep the voting accurate. As many of you have probably realized, you can't vote with your collateral in short positions. If your money's anywhere other than a standard balance, your votes don't count. So we're planning on addressing that, so it doesn't matter where your BTS is, whether it's an order or an escrow account or a regular account, but they all can be counted for voting purposes. And at the same time, we're updating how we track the votes to be much more efficient, which is what allows us to have more things that people can actually vote on and still be viable.
So you're talking about voting for proposals and other considerations, not just the voting for the sake of electing delegates.
Correct. You'll be able to vote on several different types of things, from hard fork proposals to workers to block producers, and we'll have more information on that.
Riverhead asks a good question here. Would this include the storage or cold storage voting, or is this purely client side?
Yes, this would also include the flexibility to have cold storage voting.
One thing that comes to mind with respect to this topic is there have been some complaints regarding this proposal. I mean, rather that this functionality has been absent for quite some time. So what you're saying here is it's actually an infrastructure issue as opposed to an issue that you've openly acknowledged and just said we're not going to change anything.
A lot of the design decisions in BitShares have been made based upon what is technologically viable at the time that we were doing things. That's why delegates have all their roles in one position, and why we limit things to 101 delegates and numerous other things was because based upon the various design decisions we've made along the way and our overall architecture, we could not efficiently do anything else. But as you know, we've got a new database backend that allows us to have dramatically better performance. And we've been working on a lot of stuff behind the scenes to change all that. So where we were restricted in the past, we won't be in the future.
It looks like Bitcoin 42 has a question. Why are market-pegged assets using live feeds to sustain its peg? I was told that if it were a pure free market peg, this would give more headroom for arbitrage and would bring, therefore, more liquidity.
There is market theory that says if you have a very liquid, very deep market and universal acceptance of something, then market pegging can work. In small markets like we're trying to bootstrap, we've proven it doesn't work because the first bid assets started out with people shorting them down, 15%, and there was no expiration and no liquidity, and the supply of BitUSD kept going up. So price feeds are put in there as a means of judging and making sure that things resolve at a fair price. It keeps the traders honest because when there isn't someone with a giant pool of liquidity to keep them honest. And it's just the nature of the market. Otherwise, you have two different sides. The two sides are fighting each other to see who's going to cave first, at a kind of Nash equilibrium. And if both sides had infinite patience, whoever caves first ends up losing some of the bet. And that's what would happen if we were purely market pegged. There is a middle ground, which is to say that you don't need the price feed on a continual basis. You only need the price feed periodically. And as long as market participants know that at some point in the future they're going to be forced to settle at a fair price, then they'll trade it today based upon the expected future forced settlement date. This is also something that we can do with BitAssets 2.0. The fee producers don't have to allow continuous redemption. They could have a forced settlement price feed of near zero, and then 1 month out of every year, there is a forced settlement period during which anyone who wants to force settle can force settle, which means 11 months out of the year, the price is truly set by the market based upon the expected forced settlement. And you can do variations of that with that. Once a month there's a forced settlement period versus just 1 day per month instead of 1 month per year. So you just need an occasional checkpoint that keeps the market participants honest, and the market will take care of everything else. But when you're bootstrapping a market, the liquidity is essential, and that's what we've always lacked. And this is what I like about the forced settlement at the price feed system, is that it guarantees BitUSD holders liquidity. And that liquidity, anyone who's shorting, they're shorting with basically a immediately callable loan at the price feed. And so they're going to set a premium on their short, which means that BitUSD will always be trading for more than $1 by some amount. And that premium is going to be based upon what shorts demand in order to accept the risk of being forced settled. But there's so many benefits. I wrote a paper on all those benefits. It's been discussed on the forum in great detail. But the bottom line is, for BitUSD to be successful, market participants need to know that it's worth at least $1, not about $1. It's almost fatal to ever have it be worth 99 cents. And with the forced settlement, we can guarantee that the cheapest way to buy BitShares is to buy BitUSD at $1 and then force settle. Buy BitUSD at $1 and then sell it at the premium, rather, because at worst case you force settle, which means there'll be huge liquidity in the BitUSD USD market, and market participants, merchants, consumers know that they can trade it at face value. And if they trade it at face value, they're more or less guaranteed a profit. And that's the benefits of the 2.0 approach.
So basically what you're saying is that this incentivizes people to try to seek arbitrage opportunities by buying at exactly $1 and trying to sell it a little bit higher.
Right. No one's going to short at exactly $1 because they could be immediately called, and there's various risks. So all the shorts are always going to have a slight premium above the price feed that they're asking for it, which means that if you buy it for $1, you can turn around and sell it for slightly cheaper than the shorts are currently willing to sell it for. And the difference in that premium is your profit for buying it at $1. As the market matures, you'll probably see that premium shrink to zero, and it'll probably track pretty closely to the actual value.
But at least at first, I'm incentivized to just say, hey, I'm going to put down a buy order, and I'm going to wait until, if I'm patient, until this thing reaches exactly $1. And then I'm just going to try to sell it, and I'll be patient once again and wait until there's a time when people are desperate for it and want to purchase off of me for $1.02, which will then increase the liquidity, because there's going to be a lot of people wanting to speculate on that bet.
If you want to buy BitShares, you should try to buy BitUSD first with the price of $1, or maybe even slightly more than $1, because you'll be able to turn around and sell it for more than $1 to people on the internal network. And particularly, you can sell it to shorts that want to cover for more than $1. That provides a lot of liquidity there, and that's what we want to do, is have liquidity.
Sure.
We're going to be like Steve Ballmer. Liquidity, liquidity, liquidity.
Now, is this going to change if, say, another company comes in and wants to issue their own version of BitUSD, or is that going to be a different thing altogether?
Anyone at any time can create their own variation of BitUSD with their own price feed, with their own policies on how they calculate what the feed should be, how often they update their feed, and so on and so forth. So it all depends on who you trust with the price feed. And I think most people are going to prefer to trust price feeds produced by feed producers elected by the shareholders rather than by private organizations. But private organizations are probably willing to spend more advertising their asset than the BitShares shareholders, because it's too much to, I hate to say it, but you guys are a bunch of tightwads.
Well, honesty. Well, and this brings up a question to me, as far as you said that there's going to be policies, right? And these policies, one thing that I've learned is it's really difficult to enforce a lot of these policies if it's just going to be left up to individuals. Is this going to be something that's going to be parameters that are already predefined, that you cannot go outside of these parameters whenever you're creating this asset, and it's enforced strictly by the protocol or at the protocol level?
We already have that with user-issued assets. There are flags that specify what permissions you do or don't have. Like, do I have permission to whitelist? Do I have permission to seize funds? If you take that permission away from you, revoke that permission from yourself, you can never take it back. And so when people create these assets, they can pick sets of permissions they want.
How will existing user-issued asset owners deal with these changes? Are you going to have a transition document or something that allows the old style to be migrated to the new style with regard to permissions granting and all that, or is that already in place?
We've already done that migration. Most of these features exist on the current user-issued assets. When it comes to user-issued assets, keep in mind you're always trusting the issuer, and you should never buy one of those assets if you don't trust the issuer. So we default to the issuers. If we add new permissions, they start out with those permissions, and then they can revoke them if they wish to assure their user base that they're not going to abuse it in the future. But that's our general approach to upgrading user-issued assets.
Well, you mentioned a number of features that you do during the time that you create the asset. So if the asset's already created, that's why I asked the question. Now, I know there's an update user-issued asset, so I presume you've incorporated any changes into your ability to use that interface to make changes that might not have existed beforehand, but do now.
Correct.
All right, while we got this pause here, I'll ask this question. You kind of touched on it before, Bytemaster, when you said that you see the future holding, you talked about the difficulty of having people that are freedom-oriented and wanting to have an unregulated, a very open and free cryptocurrency versus the people that are in the mainstream that want to have a highly regulated and predictable existing, very much mirror of the existing system. Now, I know which camp you personally fall into, but you're managing an ecosystem here that is got both camps involved. So how do you see making decisions and cutting a pathway that's going to Do you see it actually cutting the community in half? Those that really don't want much regulation are wanting to have a totally free market versus the others? Or are you seeing some pathway that tries to compromise the values of both of those two different parties?
The compromise, the farthest I'm willing to go on BitShares is user-issued assets having those control. I'm not willing to have BitShares be fully regulated at the BTS level or at the bit asset level. That said, the BitShares community can kind of have our cake and eat it too. If someone wanted to clone our code and create a chain that's fully restricted and compliant, then we could all be share dropped on and profit if that chain takes off as well. So we can live in both worlds. Just like we all use BitShares and we have bank accounts, we might prefer the free one, but we're willing to use the other to get, pay our bills. And I think we'd all rather use a crypto system with the current banking system than what they currently have. So I think we can have it both ways, but it would require two different chains.
Yeah, so two different chains is how I would see it working to get the best advantages to both parties. I don't see how, there's just issues that can't be compromised. It's, you get it on one side, then you have to take it away from the other. It's a zero-sum game kind of thing when it comes to freedom. So you either have it or you don't. And if you want to have mass adoption and you want to sacrifice some freedom for that, well, then that's what you're doing. You're sacrificing freedom. So the only way you can really do this well is to have separate chains for it.
Correct. And the thing to remember is that one chain is not going to kill the other chain. They both are attacking different markets and are not competing directly. There's going to be uses for both, and the supply and demand will allow both to succeed in their own way.
Right. It's just that it could turn out that the one that is the mainstream one, that where you have identity regulation, if you will, identity registration, is going to, at least initially and probably for some time to come, be the predominant one. It'll have the bigger market cap, so people that are looking for profit will be going there, but people that want privacy will go to the other chains that promote those features and those benefits. So it's just a sacrifice. It depends on what you want. You want to go for money or privacy or what? So having two different chains to meet those needs, I think, is a natural aspect of the demand of the market, which requires that both things be present.
All right, so one more question, and then I've got so much on my plate I'd like to get back to.
I also heard earlier that there's going to be some decisions made in the next couple of weeks, and there should be an announcement. I'm not holding you to any specific time frame, but from what I picked up in the form of what you said here, it sounds that generally speaking, within a few weeks, we're going to be hearing some of these things boiling up to the surface, and we're going to get more information about the future of BitShares as it's envisioned right now. Is that reasonable to make a statement like that?
Yes, I have been writing probably 30 or 40 pages of documentation describing BitShares, where we are, where we're going, and all kinds of stuff that we're working on organizing and preparing to release on the community. Everyone who's wanted the BitShares white paper, you're going to get it. So that's coming.
Really quickly ask this for Speedy. Why does the web-based wallet still seem unusable relative to the regular exchanges?
Primarily because we try to maintain neutral stance on things, and it's more or less just a hosted version of the downloadable wallet. Our future roadmap plans to change all that. The use case of the online wallet will be very, very similar to existing exchanges. The only difference is that when you deposit, you have to specify which deposit provider you'd like to use, whether it's BlockTrades or MetaExchange or some other third party. So we won't actually ever store customer funds, but integration with those services and a very, deposit money, here's the Bitcoin address, would all be integrated into the website itself.
And I need to sneak just one thing in real quick, Bytemaster. I was trying to ask this question, well, obviously you guys didn't hear me, when you were talking about the separate chain. And this is a question that I just don't see people, say an institution sees our chain and says, we're going to make this chain, only we're going to make it compliant. Do you really honestly see them share dropping on us? I have a hard time seeing it happening. I'm almost at the point where I would think that somebody in our community or in the dev team already currently exists, who actually currently works on the dev team would have to do it. Do you see an error in my line of thought here?
We are talking with people who are planning something along those lines.
Thank you very much, Bytemaster, for showing up today, and thank you for answering our questions. Thank you, everyone else, for showing up today, and don't be too busy. Bytemaster, of course, everybody else will tell you the opposite. We'd like you to be around for many years so you can enjoy the BitShares island.
I'm pacing myself to 60 hours a week. No, seriously, everyone here works really hard, but we also balance it out because we know this is a marathon, not a sprint. So we're making lots of progress. We have lots to do, but time's wasting, Speedy.
Sounds good. Well, as always, thank you for being so open with the community, and thank you to all of you. You showing up makes this really, really powerful. I mean, I can talk all day, but I would not bring up some of the most absolutely important points. So everyone who's here and showing up to ask these questions, you're integral. So never think that you're not.